The Middle East has experienced a complex set of dynamics due to the U.S. China trade tensions. While the region is not at the heart of the U.S. China trade war, it has been affected in various ways, both positively and negatively. Here's a breakdown of how the Middle East has been impacted, how the Middle East is doing.
1. Oil and energy prices. Indirect impact from trade tensions. The Middle East, being a major player in global oil markets, has seen the effects of trade tensions through fluctuations in global oil prices. Trade wars, especially between the U.S. and China, can create uncertainty in global demand for energy, which has an impact on oil prices. China's demand for oil. As China is one of the largest consumers of oil, any slowdowns in the Chinese economy, partly caused by tariffs and trade tensions, can reduce its demand for crude. This could lower oil prices in the short term, which hurts oil-exporting countries like Saudi Arabia and other Gulf states. Geopolitical tensions and price volatility. The Middle East is also sensitive to geopolitical risks, such as conflicts or disruptions in key oil-producing countries. These can drive up oil prices in times of heightened risk or uncertainty, which can be a mixed blessing for the region. 2. Diversification efforts. The Middle East has been pursuing economic diversification through initiatives like Saudi Arabia's Vision 2030 and UAE's strategic economic reforms. As part of these efforts, countries in the region are trying to reduce their reliance on oil exports and expand into non-oil sectors like technology, finance, tourism, and manufacturing. The ongoing trade tensions between the U.S. and China have created opportunities for the Middle East to attract foreign investment and establish itself as a global business hub. China's Belt and Road Initiative. The Middle East is an important part of China's BRI, which is a series of infrastructure investments across the globe.
This has led to an increase in Chinese investments in the region, especially in countries like Iran, Saudi Arabia, and Egypt. Despite the trade war, Chinese interest in infrastructure projects and energy investments in the region has continued.
Trade with China and the U.S. Many Middle Eastern countries are significant traders with both the U.S. and China. For example, countries like Saudi Arabia and the UAE are major oil suppliers to China, while the U.S. is a key market for the region's arms, technology, and other exports. The UAE and Qatar, as business hubs and trade routes, have been able to benefit from trade diversification. Their ports and free trade zones have continued to attract international businesses looking for access to both China and the U.S. Iran, however, is a unique case. Due to the U.S. sanctions on Iran and tensions over nuclear programs, the country has found itself on the opposite end of the U.S. economic landscape. However, it has strengthened its ties with China, which has provided some economic relief. Who is affected the most? 1. Saudi Arabia and other Gulf states. Impact on oil prices. Saudi Arabia and other Gulf states are particularly sensitive to oil price fluctuations, which can be influenced by the trade war. Lower demand from China, especially for industrial products, could reduce global energy demand and pressure oil prices down. Saudi Arabia, being the world's largest oil exporter, faces both risks and opportunities. On one hand, lower oil prices hurt revenues. On the other, if geopolitical tensions rise, like in the case of the U.S.-China trade war, oil prices might rise due to uncertainty. Economic diversification. The Gulf states, particularly Saudi Arabia and the UAE, have invested heavily in economic diversification to reduce dependence on oil. These countries are also competing with Asian markets, such as China, for investment in non-oil sectors like technology, finance, and tourism. In this regard, while trade tensions might temporarily shift investment flows, they could also present an opportunity for the region to become more attractive to companies seeking alternatives to China. 2. Iran. U.S. sanctions. Iran's situation is quite different. While China remains one of Iran's largest trading partners, especially for oil, the ongoing U.S. sanctions against Iran complicate its ability to benefit from the trade tensions in the same way as other countries. Iran has aligned more with China as an economic partner due to the sanctions, but its economy is severely constrained by U.S. policies. China's support. China has continued to invest in Iran and is seen as a key ally for Tehran in terms of both trade and political support. However, the country still faces severe economic challenges, and the overall impact of the U.S.-China trade war on Iran is more about its own geopolitical situation than the global trade dispute. 3. Egypt and other North African countries. Investment from China. Egypt, which is a key player in the Middle East and North Africa, MENA, region, has benefited from China's Belt and Road Initiative, BRI, which has led to substantial investments in infrastructure projects like the Suez Canal expansion. Egypt's relationship with China has been strengthened despite the U.S.-China trade tensions. Increased trade diversification. Countries like Egypt are seeking to balance trade with both the U.S. and China. The trade war provides an opportunity for Egypt and others in North Africa to expand their own export markets, especially if U.S. companies look to diversify their supply chains from China. In summary, Gulf countries, Saudi Arabia, UAE affected by oil price fluctuations, but they are also actively diversifying their economies, which helps buffer them from the full impact of the trade war. Iran, severely constrained by U.S. sanctions, but it maintains strong ties with China, which mitigates some effects. Egypt and North Africa, benefiting from China's BRI and continuing to seek trade diversification. They might not be major players in the U.S.-China trade war, but they are strategically leveraging the situation to increase foreign investment.
The Middle East is certainly feeling the impact of the U.S.-China trade war, but the region's ability to navigate the tensions depends heavily on local geopolitical factors, oil prices, and diversification strategies. Some countries are finding opportunities, while others, like Iran, are facing more challenges.